morning, everyone. My name is Katie Doherty. I am the president and CEO of the Kennebec Valley Chamber, and thank you for joining us for our Chamber Connection today. Feel free to submit questions, like I mentioned before, in the Q&A function at the below of your screen, and we will get to them in the end. We will also be recording this and putting it on our website and sharing on Facebook if you would like to save it and share it out to any of your colleagues later today. Today, we will be covering navigating the PPP process from either applying for your first draw or your second draw, and how to make sure maybe how you can get that full forgiveness, but also all the other great programs that the SBA has to offer. We are joined today by Diane Sturgeon, the SBA Acting District Director for Maine, and Bill Card, the Economic Development Specialist at the SBA in Maine. So at this time, I will now turn it over to them.
Great. Thank you so much, Katie. My name is Diane Sturgeon, and I am Deputy District Director for the Small Business Administration's office here in Maine, and currently serving as the Acting District Director because many of you may have heard Amy Bassett speak from our office in the past, and she has returned to New Hampshire as their District Director. So I am currently covering her role. What we're going to talk about today is the 2021 COVID Economic Aid Act and some of the changes that have occurred with PPP, and then some of the new things in the program, and then some of the things that have stayed the same. So Katie, if you want to go to the next slide. We'll talk about, where we are now as far as funding is concerned, the loan program details of both PPP and EIDL, or the Economic Injury Disaster Loan, the different grant programs that are also available or going to be available. And then we also wanted to talk a little bit about our traditional programs and resources that are always available to you here in Maine. And we'll go ahead to the next slide. This is just a broad overview of what Congress has really tasked us with. One of the biggest changes that they put in place with this Economic Aid Act is they wanted us to really focus on those hardest hit segments of the population, as well as to make sure that women and minorities and veterans were getting the funding they need. I will say here in Maine, we don't struggle as much as they do in some other states because we are so heavily banked and we have such a strong cadre of alternative lenders available. But in other states, they have had places where small businesses just couldn't obtain funding. We'll go ahead on to the next slide. Now, there are two different avenues for funding through the Economic Aid Act. We've got our loan programs as well as our grant programs. On the loan side, there's the Paycheck Protection Program, or as I refer to it, the PPP program. And then there's the debt relief that's being offered for small 7A loans, 504 loans, and SBA micro loans. 7A loans are done through your lender and guaranteed by the SBA. 504 loans are done in conjunction with a traditional lender and a CDC, and then SBA micro loans are done through one of our SBA micro lenders, and we have 5 of those in Maine. All of those programs, if you have existing loans with them, we're receiving some form of debt relief, as in SBA was making payments for you if the loan was approved prior to September 27th. And then loans made after February 1st are also receiving some loan payments. Then we have our Economic Injury Disaster Loan Program and the Targeted EIDL Advance. So that crosses over into both loan programs and grant programs. There's a traditional EIDL loan, which is a loan done directly from the SBA, and the only direct lending we do is through the disaster program. That EIDL loan is a 30-year term loan with payments deferred currently for 12 months. And it's at a low interest rate. It's either 3.75 for small businesses or 2.75 for nonprofits. And that can be used to support your business completely for all your working capital needs. So make traditional payments, pay your payroll, pay your rent, everything. So it's got much broader uses than the PPP program does. And then targeted EIDL advances are advances being offered to specific segments of the population who may have received a portion of their EIDL advance previously. And those people are receiving emails inviting them to apply if they do potentially qualify. And then there's the Shuttered Venue Operators Grant, or the SVOG. And this is a completely new program. It's being stood up through our Office of Disaster and will be funded through the Office of Disaster. And it's a grant program to a very specific segment of the population. And it's not currently accepting applications, but it will be in the near future. We can go ahead to the next slide. So let's start with the PPP program. This program actually had originated last year, and we whipped through quite a bit of money through the first round of it, and then we had a second round or an extension of the first round that took us through August 8th. And what happened with the new Economic Aid Act is we expanded how those PPP loan funds can be used, and that was a retroactive expansion. So if you hadn't already received forgiveness, this expansion applies to your loan that was taken out potentially in the first round. You can now select between 8 weeks and 24 weeks as your covered period, whereas before it was 8 weeks or 24 weeks. So that's offered quite a bit of flexibility to small businesses. There's a second draw option for people that were the hardest hit by the COVID disaster, that they can now come back and ask for a second draw on the PPP loan or a new PPP loan. It allows for deductions of expenses that are covered with the PPP loan debt on your federal taxes. What happened was in the first CARES Act, Congress said PPP loan funds will not be taxed. When you normally, if you have a loan that's forgiven or settled, it's taxed as income. But what the IRS did was they kind of snuck in the back door and said, okay, well, we're not going to tax the forgiveness, but we're not going to let you take the deduction either. Well, with the Economic Aid Act, Congress came back and said, nah, back the bus up. This is what we intended. You can actually not tax the forgiveness, and businesses can deduct the expenses that they paid with their PPP loan. So that was a tremendous bonus for businesses. It allows you to do your taxes as you normally would, but also to take that huge benefit of the free money from the PPP loan and take the deductions. We were tasked with updating the forgiveness form for loans of up to $150,000, and that was 86% of all PPP loans submitted in the first round in 2020, and we expect it to capture the majority of loans in this round as well. And we no longer are subtracting the EIDL advance from PPP loan forgiveness. In the CARES Act, there was a single line that said, if you received an EIDL advance, which was an advance of up to $10,000, and it was processed as $1,000 per employee from the Office of Disaster, that advance would be backed out of your PPP loan forgiveness. Starting last week, and I think we'll wrap up by the end of this week, we are paying back any of those advances that were withheld from first round PPP loans that were forgiven, and they stopped deducting those EIDL advances as of December 27th when the bill was passed and signed into law. So that's no longer an impact for small businesses. We can go ahead to the next slide. So I talk about the PPP loan a lot, but you may not even know what it is. It was actually for eligible applications that did not get a PPP loan prior to the end of the program on August 8th of last year. There's a new first draw. So if you didn't get a loan prior to August 8th and through the PPP program, you can now get one. We've extended, as I said, the eligible use of proceeds. We've also added some eligible types of entities. We've got that flexibility there with the 8 to 24 week disbursement. Your 8 weeks or your 24 weeks, that covered period does start from the date of disbursement, and your bank or credit union or whoever is making your PPP loan only has 10 days from the date that we give them the loan number to actually disperse the loan. So I get that question a lot from seasonal businesses. They want to stretch their covered period, so they want to wait to disperse the loan. At this point, that's not allowed. So what happens is you apply to your bank comes to us, puts in the information and applies, and then we issue a loan number to them. They then have 10 days to actually give you the loan funds, and they have to give them to you all at once. So if you're approved for a $50,000 PPP loan, they are going to deposit $50,000 into a bank account, and then you are responsible for using it for eligible purposes. There were certain borrowers that could request an increase to their original PPP loan amount. So there are very limited circumstances. So you couldn't just come back and say, well, I got a loan back through August, I've used all that money, I'd like more. You had to actually qualify. So you had to be a partnership who hadn't included K-1 income, or you were a seasonal business and applied prior to us really explaining how seasonal businesses could calculate their loan amount, or you had to fall into one of those categories where maybe you paid the loan back completely, or you were afraid you weren't going to be able to use it all, which happened with some people during that very beginning when we said that the covered period was only 8 weeks. They paid back a portion of their loan, but now they've discovered that they could really have used all of the money. They could come back if they met the certain parameters. So there's a notice that spells it all out, and your lender would know if you qualified. So if you had gotten a PPP loan prior to August 8th and you think you may qualify, definitely talk to your lender. All businesses to qualify for the PPP loan had to have been in operation by February 15th of 2020. Now, seasonal businesses, those summertime businesses, a lot of times will say, well, I've been open for years, but I'm not open in February. That's fine. You were in operation. Did you do business prior to February 15th? Would qualify you. And we only have until March 31st at this point to take applications for this program, or until congressional appropriations are exhausted. And we got about $280 billion, I think it was, allocated to this program. And at this point, as of Monday, we used about $125 billion. So, you know, there's money still available. And we honestly, with the modeling, we did expect the funds to last into March. So, and we're already at February 17th. So we're hopeful that they'll last through March 31st. Our end goal would be, as of March 31st at midnight, to have used every single penny. So we can go ahead to the next slide. The new organizations that were added as eligible are housing cooperatives, destination marketing organizations, certain 501c6 organizations like chambers of commerce, they were blocked in the last round from applying, can now apply, and eligible news organizations. And the eligible news organizations has to do with affiliations. There were, say it's an NBC affiliate or a CBS affiliate. Before, they wouldn't have qualified as small because of that affiliation, but we've exempted them from that size standard. You have to be traditionally, if you don't fit into one of the special categories that we've authorized, you have to be traditionally eligible for an SBA loan. So you have to meet our size standards. Honestly, in Maine, more than 99% of businesses are small, so that's not usually an issue. You have to actually be an operating company. You can't be a real estate holding company. You can't be an investment firm. There are certain businesses that are never eligible for SBA lending. So we have a list of those if you're not sure if you would qualify. And then we also kind of added in that 501c3s, which are not normally eligible for SBA lending, are eligible for the PPP program, 501c19s, which are nonprofit veteran organizations, and then tribal businesses are normally eligible, as well as traditional business entities. So sole props, independent contractors who, if you earn your pay through a 1099, you are eligible to come back and apply for a PPP loan to replace that 1099 income. Traditionally self-employed individuals, sole props, as I said, partnerships, C Corps, S Corps, LLCs, all those regular business types are eligible as well. So jump to the next slide. And then there's the second draw program that we talk about. So that's for borrowers who had a first draw loan and used those funds for eligible purposes. But they also have less than 300 employees, and they can show that they suffered a 25% reduction in gross receipts, either year over year, so 2019 over 2020, or same quarter 2019 as compared to same quarter in 2020. Now, if you weren't open for the full year in 2019, there are some alternatives there as far as which quarters you have to compare to. So the application is really clear on how to figure that gross receipt reduction out. And we have a great document out on our website. There's one that's called How to Calculate Your First Draw Loan. There's another one that's called How to Calculate Your Second Draw Loan and How to Calculate Your Reduction in Gross Receipts. And it really kind of walks you through based on your business type and how long you were open to do that comparison. A second draw loan is limited to $2 million, whereas a first draw could go up to $10 million. And the loan amount for both of those loan types is based on 2.5 times average monthly payroll. And it's full year average for 2019 or full year average for 2020, unless you're a seasonal business. And then you take a 12-week period from February 15th of 2019 through February 15th of 2020 to calculate your average monthly payroll. Now for the second draw, we also added a little kicker in there for businesses that were especially hard hit. And those are the businesses that have a NAICS code that begins with 72. So there are ones that are in the accommodation and food services. They can actually get a loan amount of 3.5 times average monthly payroll. It doesn't change what the funds can be used for. So it's important to remember that the PPP loan has some specific, very, very specific use of proceeds. And that is primarily, just like it says in the name, payroll. But then you can also use it for some other expenses like rent or mortgage interest. And when we say mortgage interest, we mean any secured debt, or for PPE and that sort of thing, with some of the extended uses of proceeds. And then to get the PPP loan, you're going to go to your traditional lender and you're going to use SBA Form 2483 SD. Anytime you see SD on the end of a form name, it means it applies to the second draw loan. We can go ahead and bounce to the next slide. So obviously, second draw loan, you have to have already gotten a first draw loan. And as I said, you have to have used that first draw loan for eligible expenses before the second draw loan is dispersed. Now, we've had some people in this round say, well, I didn't get a first draw loan prior to August 8th. Can I get a first draw loan in the second round as well as a second draw loan? And you may be able to. We're a little bit tight on time right now to be able to squeak it through, but you could potentially do it. You have to be able to say that you will have used all of the funds for your first draw loan for eligible purposes prior to disbursement of your second draw loan, and you can't have overlapping covered periods. So in theory, your first draw loan, you would use that 8-week cover period, and you would jam through all those funds, using them for eligible purposes through the 8 weeks, and then your lender would put in your second draw application late in the game and try to time it so they could stretch out when they disperse using that maximum of 10 days disbursement. You obviously, like I said, have to have no more than 300 employees. So that's a reduction from what it is for the first draw loan. And of course, as I was talking about, you have to show the 25% reduction in gross receipts between comparable quarters or between 2019 and 2020. And gross receipts is pretty much every penny your business has taken in. You do not have to include idle advances, and you do not have to include first round PPP money. But I've talked to some businesses who have struggled to show that 25% reduction in gross receipts because they got a grant, one of the economic stimulus grants that the state put out, or they might have gotten one of the other grants out there, or they actually saw a bump in business, but their expenses were higher. We don't take expenses into consideration with this. We're only looking at that gross receipts number. We'll go ahead to the next slide. So how does it work? How do I get a PPP loan? You're going to go to a lender, and I always recommend you start with your traditional lender who you have a relationship with. It just is easier if you already have that relationship. And if you're getting a second draw loan, you don't have to go to the same lender as you got your first draw PPP loan from. But again, it's easier. They already have a lot of the documentation, so it's easier if you can. But if you don't have a good relationship there, or say you used an online lender and you want to use a local lender this time, you can go to somebody different. It's not locked in there. Almost all of our lenders in Maine, traditional banks and credit unions, are processing PPP loans. We've got a few small credit unions who are not, but first check with your traditional lender. If your lender is not participating or you want to try somebody different, we also have the equivalent of what I call Match.com for lenders and borrowers. It's called Lender Match on our website. So you'd go to sba.gov/lender-match. You put in the basic information about your business and what you're looking for. And there are lenders out there who have put in what business types they're looking for and the physical location of those businesses. So you won't hear from somebody who doesn't do any lending in Maine. It could potentially be a national lender, but they will have made the commitment to actually do lending in Maine. And then they'll contact you and tell you how to apply, and you'll be able to go on. There's also a website there for our resource partners and all the local assistants. So you can always contact our office in Augusta, and we'll help you find a lender as well. You're going to do the application, which is an SBA form. And a lot of lenders have that form electronically on their website, so you can just fill it out electronically. So you'll do that application, you'll turn it into your lender will make sure that you've provided all the documentation they need, they have the information they need, and then they're going to submit that information to the SBA through our electronic portal. What our portal will do is it will review the information the lender submits and will bounce out to a couple of other websites. We'll look at Treasury's do not pay list. We'll look at at a system called LexisNexis to confirm you are who you say you are, and check your DUNS number, make sure that you haven't got other loans out there. And we'll also look at our system to make sure everything matches up, especially if it's a second draw loan. That second draw loan information needs to match the first draw loan application. And then we'll issue a loan number to the bank or the credit union. It's a little bit different this time because previously in the first round, the lenders would put the information in and they would immediately get a loan number back. This time the system goes through these checks for validation. And if you've heard any kind of brouhaha in the news or any rumblings about fraud or misuse of funds or people getting loans who shouldn't have qualified, these are the things we've put in place to kind of combat that. And again, it's only until March 31st that the SBA can accept applications. So you want to give your lender time to do their process. It's going to take them a little bit of time to run the numbers and make sure that everything is accurate and get it uploaded into our system. And the lender needs to get their loan number issued by March 31st or prior to our funds being exhausted. We can go to the next slide. These PPP loans, and I didn't even really talk about but the best thing about them is they're supposed to be fully forgiven. Like our goal is for them to be 100% forgiven. The lender's goal is for them to be 100% forgiven. Nobody wants these loans left on the books or for you to actually have to make loan payments. But if for some reason they can't be fully forgiven, say you weren't able to use all of the funds up prior to the end of your covered period, or you couldn't use them for all eligible purposes, you'll be left with a loan. The loan term is 5 years, and it's 5 years from the date of disbursement. So you have a period of time prior to having to make any payments or request forgiveness. You've got your full covered period plus up to 10 months before we're going to ask for any payments made and to supply your forgiveness application to your lender. If you supply your forgiveness application to your lender prior to that end of that 10-month period after your covered period, your payments will be deferred for the amount of time it takes your lender to review your forgiveness application, as well as how long it takes the SBA to review the application and to give the lender a forgiveness decision. So in theory, you could stretch that out. If you use a full 24 weeks, plus the 10 months, plus the lender has up to 2 months, 60 days, plus the SBA is shooting for no longer than 90 days, that's a long time. Problem with that is if we come back and say you have a loan remaining, you still only got the remainder of that 5-year term left. The rate will be at a fixed rate of 1%. There's no collateral, no personal guarantees on these. There are no fees and no prepayment penalties. So in theory, if you have a loan balance remaining after forgiveness, you could just pay it off and walk away. No prepayment penalty there. But again, our goal is for these to be 100% fully forgiven. If you apply for forgiveness prior to the end of that 10-month period, as soon as SBA gives a forgiveness decision, that's when you have to start working with your lender to repay the loan. And the rule is the lender needs to work with you to have the loan fully repaid by the maturity date. So they have a little bit of flexibility there, but ideally, again, we want to see these 100% forgiven. Go on to the next slide. As I said, you're going to apply for forgiveness through your lender. You don't come to the SBA for any of this. Everything is done through your lender. We talked about it. Idle advances are no longer being deducted. Loan funds that are forgiven are not taxable, and you can deduct your expenses. We've expanded the forgivable expenses. Like I said, it's the traditional ones: rent, utilities, and mortgage interest. But we added some cloud computing costs. We added some costs associated with your payroll maintenance. We added the cost to address COVID. So if you own a restaurant and you expanded your outdoor seating area, those are now eligible expenses. Cleaning costs and the purchase of PPE for your employees. A lot of things are now eligible expenses. So we don't expect anyone to run into a situation where they didn't have enough eligible expenses. But what we do always need to remember is bare bones minimum, this is a paycheck protection program. So at least 60% of your loan proceeds have to have been used to support payroll. Had people come in and say, well, I'm not allowed to be open. I can't be as open as I would normally be. You can increase payroll for your employees. Owners can't take a bump in payroll over what they've received in the past, but you can pay your employees hazard pay. You can pay them even if they're not working their full hours. Say you're only able to have them in the store or whatever for 30 hours a week. You would normally pay them for 40 hours. It's eligible payroll to pay them for full 40 hours, even if they're not working it. Our goal is to see employees continue to be paid. We did have a lot of people who paid bonuses or paid, the equivalent of a hazard pay to their employees for working during COVID. So that's an option. And just make sure 60% is spent on payroll. And like I said, your PPP funds are not federally taxable. We're still waiting to hear how the state finally lands on this. The last we've heard was that they are going to tax anything over $1 million in PPP funds that are forgiven. But when I took a look at how many loans we had last round that were over $1 million, it was, out of 28,000 loans, it was about 300. It was less than 350. So it's not going to hit a huge segment of the population, but potentially that could happen at the state level. And again, we're still waiting to hear if that's how they finally land on it with Maine revenue. Contact your tax professionals for sure when you're doing your taxes here. And on the next slide. Next program I wanted to mention is Kovid's economic injury disaster loans. Maine was one of the first states to get a statewide designation to be eligible to apply for EIDL loans, thanks to our Department of Economic and Community Development being so on top of that. The state was quick to get an application in and get that declaration. And that the Economic Aid Act extended the application period through December 31st of this year. It had been set to expire last year, and it's extended through the end of the year. These are loans that can be used for all of your normal operating expenses. So working capital, paying benefits to employees, rent, utilities, more actual mortgage payments, whereas PPP can only pay interest on your secured debt. You can actually make your traditional payments with an EIDL loan. It is a loan. It's deferred payments for at least the first 12 months, and then it kicks into principal and interest payments amortized over 30 years. So that's a pretty long term. And the rate is relatively decent. It's 3.75 for for-profit businesses and 2.75 for nonprofits. And that is a fixed rate for the full 30 years. Any loans over 25,000, we are doing a blanket UCC filing. So that is something to keep in mind, but there are no personal guarantees associated with this loan. At this point, those loans are maxed out at $150,000, and it's based on your reported income and expenses. So they will take a look at your tax returns. And anybody who's eligible, it's traditional small businesses, co-ops. This has slightly larger eligibility than our normal program. Our normal loan programs, it's anybody who's small or ag enterprises with 500 or fewer employees, and it does include nonprofits, whereas traditional SBA lending does not include nonprofits. On to the next slide. You don't have to do anything if you got an EIDL advance in the first round, which that was the EIDL advances that were issued prior to July. I think we ran out of funding for that program on July 7th or right around there. You don't have to do anything to ask if you're going to be qualified for a targeted EIDL advance. It's don't call us, we'll call you. You'll get an email from the Office of Disasters system, and it'll ask you to log into the portal and update some information to see if you do qualify. And what the first round of this program is going to do is it's going to bump anyone up who did not get the full $10,000 that they potentially were eligible for in the first round of EIDL advances up to the full $10,000. But you have to be located in a low-income community, And that's a definition that the IRS has developed. And we're going to have a mapping tool out on our website so people can figure out if they are in a low-income community, but we haven't got that mapping tool out there yet. I've heard that it's supposed to be coming this month, so keep an eye out for that. You have to have suffered greater than a 30% economic loss, and I think that's over an 8-week period in the prior year. And you have to have 300 or fewer employees. That's kind of the cutoff in the Economic Aid Act. And like I said, it's for people who didn't get the full $10,000 in the first round. We're going to bump you up to that full $10,000. And then if we still have funds available, we'll continue on and look to give additional advances to others that fit into that category, but did not receive an advance prior to our funding running out in the last round. And again, we're gonna email you, so don't call us to ask if you qualify. We'll let you know if you do, and then you have to submit some additional documentation. It'll include your tax returns and signed 4506T for your tax transcripts. So we're trying to work through that process with the IRS as well. So on to the next slide. Like I said, 2019 tax returns, you want to have this information available when you're filling out your application. With the EIDL program last year and with the EIDL advances, there was a lot of back and forth with the Office of Disaster. There will be none of that with this targeted advance. It's going to be a one and done application. So you want to make sure you get it right the first time. You want to make sure you submit accurate information based on your 2019 federal tax returns, because we are going to get those transcripts to make sure that the numbers match. Make sure your TIN, your EIN, or your SSN is the same one that you used on your original EIDL application, and that you have your monthly gross receipts for 2019, 2020, and for 2021 year to date. You want to take a look and make sure that you're using the information from your original application, as we said, and that it's all still accurate. And you're going to give us an IRS 4506T, which is just a form that allows the IRS to give us a copy of your tax transcripts to confirm all of the information. All that will be uploaded electronically in our portal. On to the next slide. Like I said, you can only make one application for the targeted EIDL advance. So you want to take your time, make sure it's correct, check your bank account information and make sure that's accurate. I've talked to people who accidentally keyed the wrong bank account information in on their EIDL request, and that's just a nightmare to fix. You don't want to do that on this, because if we don't have accurate information, we can't get the funds to you. And our goal is to process these applications within 21 days of getting the IRS tax transcripts back. If you have any questions about this program, you can email targetedadvance@sba.gov. I suspect people aren't going to get a lot of individualized answers on this, but the questions you ask will help drive our frequently asked questions documents that we put out on our website. And if you are approved for an advance, you'll get an email, and an ACH deposit will just show up in your bank account. So that's a nice bonus. On to the next slide. Now, Shuttered Venues Operations Grant, or Operators Grant, is a hot ticket. Everybody wants to know, when are we going to start accepting applications for this? We don't have a date yet. The problem is we have to build this program from scratch, and we have to make sure it matches what Congress told us to do. So the Office of Disaster is being very methodical in how they're putting this program together and trying to make sure they are hitting all the correct buttons to make sure that the funds get to people who deserve them and need them, and that we're doing exactly what Congress wanted. This business has this, this application process or program has slightly different parameters. You have to have been in operation as of February 29th, 2020, not February 15th, as we have talked about in the past, and you must not have applied for or received a PPP loan on or after December 27th. It's a program geared towards live venue operators or promoters, theatrical producers, movie theaters. I expect we'll see some of those. Museums and movie theaters have to have some specific meet some specific parameters to qualify. Zoos and aquariums, talent reps, and if you are an entity that has multiple subsidiaries, you can have up to 5 business entities owned by a single eligible entity that also meet the eligibility requirements. The thing to do right now, if you think you may want to apply for this program, is get registered in sam.gov As a grant recipient, you have to be in that system, and it can take a little bit of time. I think somebody told me it can take up to 2 weeks to get your registration finished there. So although you can't apply yet, go to sam.gov and get yourself registered. On to the next slide. The Office of Disaster did put out this kind of crosshatch table to compare all the programs that are available. The thing to remember is the PPP loan application talks about, has a certification on it that says I have not received any funds from the Shuttered Venue Operators Grant program. But Shuttered Venue Operators Grant has said that due to the way the legislation is written, you can't have even applied for a PPP loan and apply for a Shuttered Venue Operators Grant. You have to, unless you've been denied for that PPP loan, and it's very few people that are denied for the PPP loan. It may be the second draw that they'll get denied for because there are more eligibility requirements there. But that's an important decision that businesses are going to have to make for themselves. The funding for the Shuttered Venue Operators Grant is limited. PPP, like I said, we had over, I think it was $280 billion. Shuttered Venue Operators Grant only had $15 billion allocated towards it. And it's a full-on grant, so anybody who is eligible is trying hard to get this money, and it's open to a lot broader uses of proceeds because this business type has a lot more contractors, non-employees that they pay, and they're able to pay some of those people. Whereas with a PPP loan, you can only pay true employees. You can't pay independent contractors unless you meet a really small population, and that's our fishing boat captains. And the reason for that is that as a 1099 employee or an independent contractor, you can get your own PPP loan. So we couldn't have people getting double paid there. And then, of course, there's the economic injury disaster loan, which really doesn't interfere with either of these programs. It's kind of a standalone. So you could get a PPP and an EIDL, or a Shuttered Venue Operators Grant and an EIDL, but you can't do the PPP Shuttered Venue crossover. On to the next slide. Now we're into our traditional programs, and I'm going to let Bill talk about these a little bit, and I'll stop talking.
Thanks, Diane. And let me go back to thank Katie again for being such a gracious host. Whenever we need help in getting the word out, the Kennebec Valley Chamber is a great partner with us. And so we thank you again for the opportunity to do this. There's a lot of information in today's presentation. I'll give you a little bit more in the weeds, and then after that, we'll step back a little bit, answer the question, so what do I do now? And then talk a little bit more about the resources that we have that we haven't spoken about so far. But to continue on, the SBA has its traditional 7A, 504 and microloan debt relief, and that is, the assistance for that is based on when the SBA backed loan was approved and the type of loan that it is. You don't need to apply for it directly. The SBA agency provides it automatically, and letters have been sent out, distributed to eligible borrowers. And if you want to see what one looks like, there's a website there, sba.gov, coronavirus relief and debt relief sample section, borrower letter. And you can also chat with your existing lender if you have questions about debt relief of an SBA loan guarantee product. Next slide, please. So in terms of key takeaways, Diana spent a lot of time talking about the PPP, and that is intended to be while it's listed on the loan program side, as you heard her say a number of times, it's intended to be fully forgivable. What that translates to is it's intended to be a grant or converted to a grant if you use the proceeds for eligible purposes. And again, it's a minimum of 60% of the funds need to be used for payroll. And as Diane mentioned, there's a lot of flexibility in keeping your employees on the books. You can pay them even when they're not there. You can give them hazard pay bonuses. There's lots and lots of flexibility, but the whole, I think the cornerstone of this whole program was to ensure that that employees were retained their ability to get their paychecks. The SBA moving over to debt relief, that gives borrowers a window of time where they don't have to repay a portion of their existing loans if they have a loan guarantee with the SBA, which buys them time. And in many circumstances, time and money are pretty interchangeable. And so having some debt relief can be very helpful in keeping your business going. The economic injury disaster loan is a combination. That's primarily a loan product with the exception of the EIDL advance. And that, again, that was, you do need to repay that. But it is at, as Diane mentioned, a very competitive interest rate of 3.75%. And the window, as Diane mentioned, is up to 30 years, or typically 30 years. You can pay it back sooner than that. But what it does is it's designed to be a loan that has a really long repayment, so that the monthly payment is extremely small. So it's intended to help you jump over the valley of difficulty onto the other side, come out whole, and at that point you can keep it on the books or you can prepay it. The Shuttered Venue Operators Grant, again, we've covered everything that we know so far. It is intended to be purely a grant, so that's I think what people in the performing arts and other entities like that are most interested in, that because it's a straight grant with a lot of flexibility. Next slide, please. So we've given you, like I said, a ton of information. And what happens when you run your own business, and I had the opportunity to do that for about 15 years, and learned a lot from it, and particularly from some of the SBA resource partners. I was able to be in business as long as I was, primarily because of the help that I got. And so if you're at a place where you're going, okay, what do I do now? As Diane mentioned, if you want to apply for a PPP and you have a reasonable relationship with your existing lender, we encourage you to go to that lender. And it's primarily because they know you and you know them. We'll talk a little bit more about other lenders, but when most of the folks that if you want to borrow money, most of the folks that you are going to go see are going to ask for a business plan. And when we talk to folks, many of them say, well, it's in my head. The bank, I haven't come across a bank or a lender recently who has said, well, that sounds great. They want it in writing. They want to be able to read it. They actually want to read pretty much just the executive summary and some of the financials. And if you're not if you're a craftsperson or you have a specific skill and it's not business, perhaps you don't have the experience doing that kind of work. These are all of our resource partners. There are 4 of them. They're not in any particular order, but the Maine Small Business Development Centers, open to everybody. Women's Business Centers, also open to everybody. They focus primarily on serving women, but they do serve women and men. SCORE are volunteers. They're mentors for small business. And if you are a veteran, there's an additional resource that you have access to, which is the Veterans Business Outreach Center. And since we are still in the midst of COVID, we've included the websites for each of these service providers, and it's really easy to navigate. You click on any one of them, you start with the SBDC, and it brings you to the home page, and it asks you, are you a new business or are you an existing business? You click that, and then the next screen brings you to request advising. And then you get a time slot with an advisor, a business advisor, full-time paid professional advisor, usually with a fair amount of business experience, who can meet with you virtually and talk about what it is that you're trying to accomplish, and help perhaps steer you if you're unclear. None of these folks are going to tell you what to do, but if you're not sure because of some of the challenges that we face so far, they're a great sounding board for your ideas, and you're also welcome to say, hey, how might this work? And they can help you with things like market research. And this is true for all of our resource partners. One of the things that we're also finding is sometimes people are frozen with fear because it has been such a difficult time. Those folks are great at essentially talking you off the cliff, and getting focused back on how to get your business back on track or even expand. We've actually had a number of businesses, percentage-wise, about 30% have actually expanded during COVID-19. And we think about the cleaning companies and things like that, but also plexiglass installers have been really busy. And we mentioned that, people usually chuckle. So it's skewed pretty heavily towards folks that are having difficulty, but some businesses are doing better than ever. And so we encourage you to reach out to at least one. You're welcome to reach out to more than one. And all of these folks can help you with guiding you, or at least making you aware of the framework that's necessary to be in that business or obtaining funding. The other point that I was going to make on the counseling is a lot of businesses have had to reinvent themselves during the pandemic. And one of those that I worked directly with was an art gallery. And it was early on, and a fellow came to me and said, nobody's coming to my art gallery. I need to still sell art. And he said, I'm going online. And he had the solution of what he needed to do, but he didn't know how to do it. And so I referred him to our resource partners, and he created a really good looking website that allowed people to see the art online. And he is not back to where he was historically, but he's still in business. And so that's these days, many folks view that as a success, and we do too. The other thing is, the last thing on the counseling side is, these organizations, the Maine Small Business Development Center is works with Maine DECD on a micro enterprise grant of up to $5,000. So that is a source of funding for folks that have, I believe it's 5 or fewer employees and work or live in economically disadvantaged areas. But you qualify, the eligibility is determined right with the business advisor during a session. So there's a prospect of $5,000 in grant funding if you choose to go there. Additionally, the Women's Business Center, CEI, is a very prominent economic development organization in Maine, and has a wide portfolio of lending programs, one of which may best suit your business. So we're not in the business of specifically trying to sell our loans. What we're trying to do is provide you with information and get you matched up with the best solution for you and your business. What we really want to have happen is for you to be successful and to survive, prosper, and grow, and hire new folks. Next piece is in terms of access to capital, our loan guarantee programs. Next slide, please. And one of the things that I like to focus on, in addition to the 7A and the 504 that Diane had talked about earlier, are the microloans. We have the websites listed for each of the micro lenders in Maine there. And those are for loans of up to $50,000. And they are underwritten in a slightly different way, in that these are all mission-based nonprofit organizations. They are not responsible for providing a return to their shareholders, so that they view things through a slightly different lens. When they make a loan, they still want to get repaid, but I think it's fair to say that they take into account additional circumstances in underwriting a loan. So if you are a small borrower, these are a great resource for you. And I would encourage you to go to the one that is closest to you. Androscoggin Valley Council of Governments is in Auburn. Community Concepts is in Lewiston and South Paris. Mainstream Finance has an office in Rockland and in Bangor, and the CEI is really located throughout the state, and Northern Maine Development Commission is in Caribou. There's two other pieces that I need to cover in terms of programs and services. One is government contracting. That in and of itself can be its own webinar, but basically the US government is the largest purchaser of goods and services in the world. And that's a great opportunity for businesses in Maine and in other states if they want to increase their sales. And you don't need to be a builder of big ships and airplanes to be a government contractor. The government buys everything from the PPE products to cleaning services in the federal building, in the Muskie building where we work in Augusta. So it's a wide range of products and services that they buy. And I mention that here only for folks to consider, hey, maybe there's something that we can sell in terms of a product or service to the government that we haven't thought about before. So it's intended to be an invitation and opening. And if you want to pursue it, we're happy to talk about it individually with you, work with one of our resource partners, or directly with the Procurement Technical Assistance Center, which is up in Bangor. And then the disaster program is, it's funny, until this past year, we didn't talk about it a whole lot except for floods and earthquakes, things like that. But right now, it is arguably one of the most prominent, if not the most prominent piece in our portfolio. So all of what Diane had talked about, or most of what Diane had talked about, is included in the disaster portfolio. And next slide. And if you want to know, if you want to stay current on what's going on, one of the things that I would really encourage you to do is to get on the SBA, the Maine District Office newsletter. And that's the first one. That's the top SBA.gov updates, where we will email you the guidance that we get, the updates that we get. And it's usually, it's always the morning of the day that we get them, because the first thing Diane asks one of our public affairs person to do is, have you gotten those out yet? And the answer by 8:30 in the morning is usually, yes, I have. So if you, that's essentially, that's as fast as we can go. And you're welcome to call us, but that's the way to stay most up to date. And it's an ongoing source of information to be helpful. There's Twitter. You can also email the district office at main_do@sba.gov. You're welcome to call us. And then there are the associated websites that can give you more information if you haven't gotten enough already in what we've talked about. Next slide. And Lender Match, we have one other program that usually mention that I didn't see listed, which is lender match. And it's important to mention. That is, if you, as we've mentioned, if you have a satisfactory or a good relationship with your existing lender, we encourage you to keep that regardless of who it's with. If you are in an underserved area or you're not satisfied with the relationship you have with your lender, you can sign up for what's called SBA's Lender Match, where you key in some information about your business and then lenders reach out directly to you. And so that is I consider it an underutilized resource, but potentially very helpful. Having said that, the Kennebec Valley, I think, is very well served by by many lenders, but it's still it's a piece that's where I think is warrants mentioning. And with that concludes all of my piece and Diane's, and we have I think we've got a chat. Somebody had a chat and somebody had a question. So we can, if you'd like, we can go right to questions now.
Yeah, so let's jump over to questions. So I have a chat that says, for lenders, how long should we be waiting for the SBA to follow up on hold codes and updating forgiveness applications, which were not funded fully because of computer error? To expand on that, we have communicated through the system and via communications to the Commercial Loan Service Center. Any insight on that?
Yeah, thank you, Katie. So with the process that I talked about with the PPP applications needing to match some data, the hold codes are relative to first round PPP loans that were approved and some information didn't match, because like I said, when we did the first round PPP loans, we just jammed those account numbers out there quickly. We didn't do any of that data verification that we're doing now. With the second round, we're going through and we're doing some data verification, and lenders are getting errors either because the second draw loan doesn't match what the first draw loan said, or because there's some sort of hold on the first draw loan, or they're doing a new first draw loan and the information they entered didn't match what's out there in, on the databases that we're hitting. So lenders are getting some error codes. There is a new process in place that allows lenders to clear the vast majority of those codes themselves. So if you as an applicant have one of those codes, those compliance check codes pop up on the system, your lender may reach back out to you and ask for some documentation. There are some like Treasury do not pay list codes or TOPS codes, which is Treasury offset program, which means that you had a prior loss to the federal government. You may need to show that you had paid that bill off, or that you didn't actually cause a loss to the government. It may be something simple, like it's saying you weren't in business or in operation prior to February 15th, and you can show that yes, indeed you were. It's just because some database out there didn't think you were. It is taking time for some that the lenders can't clear themselves. The lenders will have to upload the documents and request that the SBA clear those codes. I sent out an email this morning to all of our resource partners and our lenders about a new option that's in E-Trans servicing. One of the biggest issues we were having was because people were moving so fast during the first round, people miskeyed information into the system, like social security numbers or EIN numbers, or businesses have gone from being a sole prop and now they have employees, because as we said, there are a lot of businesses that did grow over this time period. Well, if you go from being a sole prop that files your taxes with your social security number, as soon as you get employees, you have to have an EIN, and our system wouldn't let you enter any number of employees if you were trying to enter a sole prop without an EIN. Well, if your first round loan was done with your social, it's not going to match. Now there's a process in place where the lenders can go in and fix that. So a lot of these things, Molly, you'll be able to correct yourself. We don't have an exact time period on how long it takes them to get back, but the benefit of us allowing the lenders to use delegated authority is that it's taken a lot of the low-hanging fruit out of that queue, and now we're able to focus on it a little more quickly. If you have a specific situation that isn't getting resolved, you can definitely email me at the office and I'll take a look and see if we can figure out what's going on.
Great, thanks, Diane. Another question is, I am an executive director of a nonprofit interactive and profitational theater group who has been greatly impacted by the COVID-19. No business because no face-to-face contact is possible. May we apply for the Shuttered venue grant?
If you have, it will depend if you have an actual, there's some pretty specific parameters around that. What I'm trying to ask everybody to do is take a look at the FAQ document that's out on our website, which is just at sba.gov/SVO grant. And there's a ton of information out there as far as who qualifies and who doesn't qualify or who's expected to qualify. And then you can make the decision. You may qualify for a PPP loan instead because nonprofits are eligible for that, but you'll have to decide which is the better fit for you. Based on just that statement, it sounds like SVOG will work for you, but I'm going to say you got to take a close look at the website and at the FAQs to see based on exactly how you're structured if you will qualify. We in the district office have zero control over eligibility, over loan decisions. So we always, I'm afraid a lot of times we do have to refer back. And on SVOG, we're trying to be very, very careful because that is a grant program. So we have to make sure that any information that goes out about that program goes out to every single potential applicant at the same time. So we don't have any inside scoop on that. We get the information about the program at pretty much the same time that the end users get it.
Another question that I got sent is the SVOG and the Save the Stages the same thing?
Save the Stages was a little bit different than SVOG, but it has the same basic premise. We don't use Save Stages because that particular bill did not pass. The Economic Aid Act passed, and it captured some of the things in Save Our Stages, but not all.
Perfect. Let's see, that is all the questions that I have received on our end. Any last minute questions, go ahead and send them in, but I think you guys covered so much information in your PowerPoint that people now, I think they're good. They don't even have questions. I did get a couple requests to receive the PowerPoint slides. So if you would like the PowerPoint slides, shoot me an email or send me a message and I can send you a PDF version of the slides as well as with the recorded link. I want to thank Bill and Diane for your time. You guys have been very busy in the SBA office during this almost full year, I would say. I can't believe we're almost in a year. So thank you so much for covering this information for our members and answering our questions. Thank you to our sponsors for our Chamber Connection series. It's Central Maine Power and Kovid Savings Bank. And with that is all I have. And I hope you guys all have a great rest of the day and the rest of your week. And please reach out if the Chamber can do anything for you guys.
Great.
See you later.
Thank you so much, Katie.
Thank you very much. Bye-bye, folks.